Hello everybody, my name is Dan Crlenjak. I'm a realtor with eXp Realty right here in sunny South Florida. And today I'd like to talk to you guys about taxes. Well, unfortunately, tax season is upon us. It's mid-February 2022. There's nothing we can do about it. We're gonna have to pay our taxes. That's why I'm discussing the top 5 tax benefits of home ownership to make sure that you make the most of the tax benefits that are available to you. I should also state that I am not licensed to give tax advice. This is simply publicly known information. When you're ready to apply these benefits to your own taxes, be sure to consult with a licensed tax professional. It's important to understand that all of the tax benefits I discuss today are known as itemized deductions. When you prepare your taxes, you'll have to choose between taking an itemized deduction or taking the standard deduction. And you'll make that choice based on which deduction gives you the greatest tax benefit. More on that in a moment. Currently, the standard deductions are set at $12,500 for individuals, $25,100 for married couples, and $18,800 for single family head of households. So if your itemized deductions, the deductions that I'm going to discuss today in this video, plus a whole host of other types of deductions that are offered from the federal government, you're going to choose to use the itemized deductions when it comes time to prepare your taxes. Let's take a look at a quick example. Let's say a single parent head of household earned $100,000 in 2021. Their standard deduction would be $18,800 because they're a single parent head of household. But once they tallied up their itemized deductions, they discovered that that came out to $25,000. If we subtract the itemized deduction value of $25,000 from the standard deduction value of $18,800, it becomes clear that this taxpayer would reduce their taxable income by an additional $6,200 by choosing the itemized deduction. Once everything is all said and done, this hypothetical taxpayer effectively reduced their taxable income by $25,000. In a nutshell, it's important to understand that these itemized tax deductions are not tax credits. They function in order to reduce the amount of taxable income that you must report to the IRS. Our hypothetical taxpayer was able to reduce their $100,000 reportable income down to $75,000 by taking their $25,000 itemized tax deduction. Okay, let's get rolling. Tax break number 1 is property taxes. Taxpayers are able to deduct up to $10,000 in any given year in property taxes. So by example, if you paid $7,500 in property taxes in 2021, you'll be able to deduct that full $7,500 as an itemized deduction. Okay, tax break number 2 is mortgage interest. And there's 2 possible deductions here with mortgage interest. If your mortgage went into effect before December 15th, 2017, you'll be able to deduct the interest that you paid on your mortgage up to $1 million. If your mortgage went into effect after December 15th, 2017, you'll be able to deduct the interest that you paid on your mortgage on the first $750,000. So get busy, find out how much mortgage interest you paid in 2021 and take that deduction. Okay, tax break number 3 is PMI or private mortgage insurance. If when you purchased your home you put down less than 20%, chances are very good you're paying some form of PMI. PMI costs anywhere between 0.3 and 1.15% of the loan. The good news is that these payments are deductible as itemized deductions. For example, if you make $100,000 and you put down 5% on a $200,000 loan, you'll pay somewhere around $1,500 in annual PMI premiums. Let's go ahead and add that $1,500 to our itemized deductions. Tax tip number 4 is the home office deduction, and this deduction is strictly for individuals who are self-employed and work primarily from home. If this deduction applies to you, you'll be able to deduct $5 per square feet up to 330 square feet for a maximum deduction of $1,500. And finally, tax tip number 5 is interest paid on a home equity line of credit. Now, over the last couple years, many homeowners said to themselves, hey, if I'm gonna be forced to stay at home, I'm gonna turn it into a place I don't wanna leave. And many people use a home equity line of credit to get that done. The good news for these folks is if they use the funds from their home equity line of credit to buy, build, or improve a property, all the interest you paid this year is completely deductible. Well, that wraps it up for today, my friends. I hope that you found this information to be timely and helpful. If you did, please consider subscribing. Please like this video and hit that bell so you don't miss any future content. Thank you so much for watching and have a wonderful day.